Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar yesterday plummeted from the region of 72 cents and also tackling the 60-day moving average, which was around, as I pointed yesterday, around 71.80. From the two rejections, the market posts a bearish outside range day and now gives further risk to the downside, with the technical implications still somewhat negative when we see the RSI look back of a free period under the midway point of 50 and therefore married up to the MACD, which is also negative. Yesterday, the RBA kept their interest rates on hold. There'd been much speculation that there was a possible cut, but one thing to notice is that the statement was rather dovish and therefore has left the door open to a possible cut in November. With the wording slightly changed, has given a lot of economists around the city that we could see the second cut, which is Melbourne Cup day, and last time 10 years, close to a decade ago, and therefore could see further risk to the downside for the Australian dollar in due course. At the present level, we are looking down towards 70.65, and we did get a brief look underneath 71 cents today. And with the bearish outside range day, it does give further concerns that the bears will navigate their way to eventually back down to the bottom side of the range, either at 70 cents or 69, with any advances likely to fail above or around 71.45 to 55. Well, with President Trump pulling the situation that the stimulus package, now posting it to after the presidential election, the US dollar found a bit of strength and rallied to 93.85 to the index, and therefore saw many rejections, starting with the euro at 118.10. From that rejection, the market now looks down towards 117.15. A close beneath there would reinstate the downside to at least 116, but looking to the technicals, we would like a little bit more confirmation, and that break of 117.15 could be just a ticket to take it back to 116 to 115. But first of all, I do stress a little, wait for the confirmation, otherwise we could see a retest to the top side. Dollar yen, little to say, still capped from that 105.90 figure, but still continue to keep your stop losses and take profits according to your risk management, just in case we get a break of 105.90 figure, because this could see a short rally, stop loss triggered towards a region of around 106 figure 25. With the technical implications a little bit biased to the bull case, do be on your guard that if we do see a break, and we're getting very, very close to that level, we're only about 15 points away to 25. So, but it has held very well. Wait for the cut to the confirmation. Otherwise, while intact, we can still see it move to the downside, but the technicals are in somewhat slightly favoured to the upside at present. The pound took the challenge back to 130 figure 20 and was rejected. And from the rejection, we got a break through the midway point and also the MACD breaking down a little. Nevertheless, a move through the level of 128.70 would give further exposure to the downside to around 127 to about 126.5. This in turn would see that the bearish outside range day, also from sterling yen, has given further risk to the move through 135.80 to see it down to 135 or maybe lower. One step at a time though. Let's see if the sterling leg can break down. And that means if the sterling leg can take out the level of 128.70, then this would see further strength to the downside, being the pound leg, and look to its target. My call, the fact, is that towards 1,920 to 26 could be rejected. Well, last night we got to a high of 21 and was rejected and reached its target of 1,872, or 69.72 being the case. With the market attempting to recover at the moment, may see a slight upstep, but with this trend line somewhat strengthening since that bearish outside range day, could see failure towards 1,900 figure 10. And maybe see another down test towards this level around 69.72. A close beneath there would see further risk down towards 1,850 and reassess. Oil's a little bit wobbly, but attempting to recover as we slightly see a step up through this trend line. There was a rejection through there, but the close today is crawling its way a little bit towards the recent highs. I'm not overly bullish. I still thought there could be a possible challenge to the downside after we recently saw this 2-day plunge, but so far it is looking somewhat respectable as the MACD just gets over the zero and the RSI is posting a somewhat stronger, firmer pattern. Therefore, maybe see a little more rise towards that rejection somewhere around $41 a barrel and reassess from there. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the rest of the day.